Hey everybody, it is Lorillia. Welcome to another episode of the Never Lose a Deal podcast. As always, this podcast is for real estate investors who want to learn how to creatively leverage other forms of capital in order to expand their portfolio. So today, I want to talk about, as you see the title, FHA income limits and investor loans. And I thought this topic would be very good because it is going to tie into everything that I have been talking about in the past few episodes. And so, in the past two episodes, I've been talking a lot about um, your understanding of if you are a real estate investor who is looking to leverage investor loans, that being DSCR, that being fix and flip, that being new construction. And as we go into 2025, as I film this, it is now December 2024. Now is the time to lock in. Now is the time to really understand what it is that you are doing when it comes to leveraging these forms of capital. Because as I mentioned in the past, when you decide to go into the space of investor loans, that is a different animal. It is not like FHA getting an FHA mortgage. And so, although I am not one who originates FHA, I'm not a mortgage broker who works with clients with FHA. But the topic that I want to talk about today will be in alignment with what it is that I talk about. Because in my last episode, I talked about fix and flip loans. And so I really want to tie in some real life information, what I'm here doing locally here in my state of New Jersey, working with investors, along with some of the new guidelines that FHA has put in place that will take into effect of 2025. So that is why I can't emphasize enough that locking in is important. Now is not the time to take part in um I want to say strategies that will not produce any fruit. And when I say will not produce any fruit, they will not produce any type of fruit, is because a lot of times many people do not know the moving parts of what it is they are doing. And so my desire, as always, on this podcast is to really inform the listener, whether you are watching on YouTube or listening on the podcasting platforms, is to give you context with what it is that I am talking about. So, of course, although a lot of times these episodes are only 30 to possibly 50 minutes long, I do try to really give an understanding of what it is that I want to deliver to you, because this stuff will affect how you decide to invest going into 2024, especially if you are looking to leverage any form of capital that is asset based. And so, asset based lending, talked about it before, do a really brief recap, is lending that is specifically designed for investors. It is not FHA money. It is not government backed money. It is not VA money. It is not 203k money. Those mortgage products or monies that is backed by the government. Now, I'm not going to go into the Fannie Mae's and the Ginnie Macs and all that other stuff, but that's government money. When it comes to asset-based lending, those loans are either hedge fund backed by hedge funds or by private lenders. So the guidelines are going to be different, particularly for the lender or the mortgage person that you are working with. It is not straight across the board. So I give you that disclaimer to let you know that the information that I will be talking about will be based on my experience and lenders that I work with. Because the biggest misconception many investors do, primarily newbie investors, is they do not know the difference between the two. They're listening to an FHA guy, a FHA girl who knows that. They do that all day and all night. They are the FHA guru. And they're giving advice to people who are in the investor space, having those individuals thinking that the guidelines are the same, and they're not. And as I mentioned to you in other videos, FHA is the same in New Jersey as it is in Virginia, as it is in Alaska, and the list goes on and on. You can literally go on the government HUD FHA site. They will give you all the guidelines on how that mortgage product works. It's not the same with investor loans. So that is why I'm putting this podcast episode tonight, is because one of the important things that you want to consider in 2025 is who is part of your power team. I love that topic. I recently heard a mortgage professional located here in my state use that term, and I thought it was a great term to use. Although your power team, of course, may be something that you have heard in another aspect, but your power team is who are the people and the individuals that you need to lock arms with if you plan to have real estate success in 2025. And that is what I want to get across to you today, because there's a lot of changes that are happening. And so if you are an investor who wants to stay active, who wants to keep their toolbox, and as I say, your funding and financing toolbox sharp, then you need to have someone that is part of your power team, primarily the financing part. I'm not talking about your accountant. Your accountant would be part of your power team, your lawyer, a real estate agent, of course, a financing person, and of course, although I do work with lenders who do work nationwide, and I can work with anyone, but this is what I can't stress enough. Find someone, whether you decide to use me or use someone else, but when you go into 2025, even the remaining time on 2024, because we still do have time for investors who do want to lock in and buy real estate or what have you. It never fails. Every time I do a podcast episode, my phone goes off. And so I say that to say, have someone on your power team. So important to have someone on your power team. And that is what I want to talk about today. Give me 1 second. Oh boy. So let's get into it. So I was reading an article on bigger pockets. And let me share my screen to show it to you. Okay. So I hope you can see my screen, and I pray that you can. I was looking at this article on bigger pockets, and bigger pockets is talking about the FHA limits that got increased. And I like, although I had already heard the news, but I like how the article was written, because it was written in the context of opportunity for investors. And just so you know, I mean, do your own research, do your Googles. All you have to do is Google FHA limits for 2025, or either go on the Bigger Pockets website and read it for yourself. But anyway, it talks about The FHA limits that have been increased in 2025, and they go as high as, if you can see my screen, loan limit values of $806,000. And that is the value. Now, of course, with FHA, depending on the market that you are in, the numbers may be different. But here in a high income state like New Jersey, as well as a high value state like New Jersey, this is a win win. This is a win win for the fix and flip investor. And so, although I am not an FHA expert, and do not claim to be one, as always, all alerts are coming up. Um, but I do make sure that I have some understanding so I can be an a more informed advisor to my investing clients when it comes to what is the end game, when it comes to whatever they plan to do, when it comes to leveraging an asset-based loan such as a fix or flip or new construction. That is important because I always, when I'm having a discussion with a client or if I'm speaking to a group of individuals, I'm supposed to be speaking next week to a group of real estate professionals here in my state, actually locally, in the great city of Newark, New Jersey. And so, going to be talking to those group of real estate professionals about asset-based lending and how I can help them. But one of the things that I always stress is that you have to know your end game. You have to know what's next. And although the experienced investor may know that, it is also important to remind them of what's next because that is going to play a large part in the investor getting any type of loan through underwriting. And so this is straight across the board. Although I've said every asset-based lender is different, every mortgage professional you work with who can help you with fix and flip loans, new construction, DSCR is different, but understand a lot of times the rules are the same, meaning that every lender to is going to expect you to have some understanding of your deal. And so this article pretty much goes into the limits that have been increased, which of course will be greater opportunities for the investor because now the fix and flip investor can now be able to sell to the end buyer. And a lot of times, those end buyers may be first time first time home buyers who will use FHA. And so coming back to want to come back, I hope I'm back. um uh, Now I don't know where I'm at. Okay, I think I'm back. Okay. Coming back, since I'm back over to the screen, I'm not sharing my screen. Um, that's so important. Can't stress that enough. That is so important. Knowing the landscape of who will be the end buyer to buy your home. Going back to what I said, when I speak to groups, when I'm having a discussion with an investor, um, no lender is looking for you to figure it out once you're in a deal. Like they're not looking for you to just give me the money and I'll figure it out on the way. So you need to know, that is why it's so important to be an informed investor, because depending on who you are listening to, um individuals will have you thinking that People aren't buying. Investors are home buyers are waiting for interest rates to go down. And don't get me wrong, that all has its place. That has its place. But there are individuals who are always going to buy. And imagine if you are an investor who can be a more informed investor. Um, and with being an informed investor, you'll make sure that you're working with a real estate agent where you two will be on the same page, that can now be a selling point to the new home buyer. Because when I think about here in New Jersey, high income state, especially in the county that I live in, especially in the county that I do business with, even as I mentioned to you about Newark, New Jersey, going down, speaking to investors down in that city. It is an urban city. Demographics are a little different than, of course, where I reside, but understand with the proximity to New York City, and that's with any state. Whenever there is a metropolitan main city in a state, a lot of times those surrounding states or cities or communities are high income. And I don't claim to know every market, but I know this for certain. If you take the United States, you take the map of United States, and if you just go around the perimeter of the country, as I do it, I'm literally, imagining what United States will look like. So you go all the way up to Maine, come down to Florida, all those states, prime real estate. The whole perimeter of the United States is all prime real estate. I don't care where you go. Starting up to Maine, down to Florida, go up into the Gulf area. Now you're in Florida. Of course, you got some southern states, but they're near the water. Then you're up by Texas and come around, and then you go up to California and up. That whole perimeter is prime real estate. Prime real estate, don't care what market you're in, prime real estate, whatever investor is in that market, they know that that's prime real estate. Going back to what I said about the great state of New Jersey, when I did a case study a few episodes back, did a case study on a DSCR loan in the city of Newark, and I showed you $500,000. $500,000. Even at that $500,000, now I'm someone who do work with investors, and I gave you the guidelines of if an investor wanted to buy that, leveraging a DSCR loan, but that's still a prime opportunity for a person who wanted it to buy it FHA. Because even though the guidelines are increasing in 2025, but in 2024, they still meet the guidelines to purchase a 3-family FHA, what is it, 3.5% down. And, I like the way Bigger Pockets wrote the article, and they said, and you get the government to pretty much finance the rest. I mean, it makes sense, yeah. And although, like I said, I don't even, work with clients who are looking for FHA, but it just shows you that the government is realizing that there's prime real estate in this country where values are high, and they're increasing the loan limits. Now, why now you see why I'm doing a podcast episode on this topic, is to give you an idea of 2025 is a time to lock in. Now more than ever. I do not know the age of those who are listening, but let me tell you this. If you are under the age of 40, 9 times out of 10, and this is what I know for certain, unless you were just exposed to it, the last real estate um uh debacle, or whatever you want to call it, meltdown, shutdown that happened. many of those individuals, those under the 40 crowd, they just were not, probably was not in tune, like I said, unless they came from a background where they had family members or whatever who were real estate investors. But them themselves just do the math on it. They really don't have no exposure on what a market looks like in a down market. And so now is the time to be very careful of getting advice from individuals where they have not been through other economic cycles. Because, like I said, 9 times out of 10, if they are under 40, they've only seen great times, they've seen booming times. So now we are in a market that interest rates are a bit higher. That's why podcasts like mine, where I talk about creative financing, is there are opportunities to invest in real estate, but they're going to be possibly outside the scope that the what people normally know how to do. Now is going to be the time. I said this back in 2022. I said, mark my word, this is the time now, the next couple of years, when 2024, I was saying this back in 2022, but I was saying this is going to be the time where we are going to separate the serious from the curious. And so now is the time. That's why I said a power team. Now is the time for you to lock in and have a power team, individuals, a group of individuals, part of your power team, but one of those individuals must be a financing professional, not you. And yes, I am online talking, but be very careful of listening to something online and then want to be able to bring it to a fruition with another professional, especially if they do not have the expertise. Now is not the time, because this is what I want to tell you. Going back to my example about 2008, don't be one of those individuals. Because I always say 2008 is when I ran to real estate, where other people had the story of they lost this, they did this happened, everything, the bottom fell out, they were at the, whatever, not to make a mockery of people's situation, but I ran to it. So I only know markets where things are, a little topsy turvy. That has been when I have been able to thrive, because competition is scarce. you know, uh, those who are literally doing things, they're not going to be, the beginners are too scared, and then you have the ones in the middle are still waiting for interest rates to be like they were in 2019 and 2020 and 2021. They still waiting for that. So right now we're only in a market of people who, when it comes to investor pool, are those who have been through some topsy-turvy markets, and they just know we're going to just press on. Now is the time. That's why it's so important to look at and read and be and be a student of understanding market cycles, what's going on. Can't tell you enough. Now is not the time to want to do any types of tricks of the trade, because mark my word, the individuals who are chasing tricks, who are chasing falsehoods that are never going to bring anything into fruition, in a few years they're going to be the pool of those individuals who are going to be saying, oh man, if I had my ducks in order, I could have did this, I could have did that. Ladies and gentlemen, don't be one of those individuals. So what I want to share with you, when I said I would do that in another video, is I want to give you an idea of what we're working on here in New Jersey, because um, I said that I was going to share some things with what we were doing, what we're doing. So myself and other investors and people that I work with. So we put our marketing started, I would say mid part of 2024. We put marketing systems in place so we can start to crank things up. And as we began to crank things up, um, not only will I be helping investors on a financing side, but I will also be helping them on the acquisition side, because what I found is that we have, I do have a network of investors who have access to capital in addition to the financing that they would need to be able to do investor deals. Because once again, you do need some money to do investor deals. Don't let the internet fool you into thinking you just need one credit card. But I digress. Like I said, this show is not for the person who wants to buy a house and also just get a credit card. This is someone who literally is looking to create a portfolio, build wealth, do something long term and long lasting. And they understand that it's a marathon, it's not a sprint. So, like I said, this is one of the fixer uppers. Very small home here in Somerset County. We put an offer on this home for over 300. This particular market, for single family homes, the investor who will buy this, of course, will increase the square footage. So what does that mean in the investing world? They'll add on to this little home. So they'll pop off the roof, build it out, maybe even knock it down, bring it down to the studs. At the end of the day, they're going to make this home into a massive home. And so understand, making it a massive home, they can, once everything is done, it can literally resell for, as I mentioned, high seven, in the eights, can even be at 900,000, depending on the bells and whistles and the expansion that they want to do. So house needs a lot of work. Like I said, it is a fix and flip. So these are not pretty homes that I'm showing you. So it's a hoarder house, and the family wants to sell it. As you can see, house needs a lot of work. So, this is an example of what it is that we hear, or should I say myself and other investors, but today you only see me on this podcast, but understand there's a group of us that all work together. But understand this is what we're doing. So, with knowing this, we know the market, and that is so important. You got to know your market. You got to know what you can acquire real estate for. You got to know what you could get financing for, and then you got to know what the end game is. Who is your end buyer? And that is going to be so important in the next couple of years. I can't stress this enough. I had a conversation with a realtor on Friday, who wants to get into the fix and flip space. And with a lot of people, and this is no shade, people assume that just because individuals have the title of I'm a real estate agent or I'm a realtor or whatever, that they know the investor space. And that is the furthest thing from the truth. There are, and I talked about that in the my last podcast episode. Yes, there are realtors or real estate agents that are investors too, that wear the investor hat, and they understand all the intricacies of making the transition to agent to investor, or as I say, or you can be a person who wants to be an investor and can guide you. But a lot of them do not have that expertise. And so this particular agent was very humble and didn't have the expertise. This is something they desire. They want to be able to do fix and flips, but they don't know how to acquire the financing. And so one of the biggest, and I tell this to anyone, one of the biggest hurdles new investors have who want to be able to merge over to the fix and flip space, and get the financing. One of the biggest things that smell newbie to a mortgage professional, which is why a lot of times I talk to people and they're like, I can't seem to get any information. That they won't sit down with me. And I'm like, because that is not what mortgage professionals do. Maybe they'll have a conversation. You may meet one or two that may go, but they're not going to sit down with you and show you how to get a deal. That is something that you have to know you have to desire to learn how to do yourself. So going back to the agent, first thing that the person said was, what is the interest rates for the loan? That smells newbie. Said, see, that's FHA talk. And I said to her that. I said, see, and I shouldn't have said the gender, but I said that to the person. I said, let me share this with you. The investor world is totally different than the single family or primary home market. That's something that individuals who are looking to buy an investment property, possibly a primary home, would say, well, what's the interest rate? That's fine. But in the investor space, that doesn't play a part, because what plays a part is the actual asset. A new investor is not going to get the best terms. So you may see mortgage professionals, lenders advertise a teaser rate. And I may be telling all the secrets. They'll put a teaser rate. But understand, if you don't have no experience, you're not going to get that rate. Newsflash, I hate to tell you, they won't tell you. You're not going to get that rate because you don't have the experience. And so the reason how I know this, because a large part, now, once again, not speaking for what other professionals out there, but a lot of the lenders that I work with, they have a tiered system. So they'll say, if the person has did this or many fix or flips, this is the rate they can be, which is that best teaser rate, considering everything else is in place. And then if they did it, and so you are new, you have no experience, you did no deals, your 800 credit score is not going to assure that, one, you're going to get the financing, and then two, you're going to get that rate that they advertise, which is a teaser rate. I know no one is going to tell you that. See, that's FHA talk. That's that talk. That's primary talk, where interest rates are important. Don't get me wrong, interest rates play a part, but they also, because of course, you need to know what you're going to be paying on the money, but you're just not going to get the best rate. So I say that to say, the person was a new agent, didn't know how the investor side worked, and I had to give them guidance on it. So if I could leave you with anything, FHA income limits are something that definitely, if you're an investor, you need to know, because now it can broaden your buying pool, especially when you are in high income markets. Of course, everything wants to ring now. So with that being said, this is Lorillia. If you want to learn more about me, as you can see on this podcast, you could go to you'll see the ticker going on and on, www.neverloseadealpodcast.com, to learn more about me. But also want to give a I want to give a big shout out to the sponsors of today's show, www.leverageportfoliocapital.com, to learn more about how you can get access to asset-based lending, financing to do either your next fix and flip, new construction, DSCR, portfolio loans, the list goes on, ground up construction. Like I said, this is the place if you want to learn more about how you could creatively have other financing tools part of your financing and funding toolbox. This is the place you definitely want to be locked into. So if you're watching this on YouTube, please leave a comment. Let me leave your thoughts. And if you're listening on one of the podcasting platforms, please rate, subscribe. I always forget the terminology for the podcasting. I forget, what do? I think you rate it or something. But as always, we'll continue to share more content in the creative financing space, especially when it comes to asset-based lending, especially when it comes to unsecured business financing. And let's do some deals. Let's create wealth for ourselves, and let's be informed. So once again, this is Lorillia signing off.